Welcome to The Explainer. Today, we're digging into the really complex story of a UK defense giant called Chemring Group.
All right, let's get right into it, because Chemring, well, they're smack in the middle of this huge global shift that you just can't ignore. And what's so interesting is that it's this story of massive success on one hand, bumping right up against some pretty big problems on the other. It's a real puzzle, especially if you're keeping an eye on the defense industry.
So first things first, we've got to get a handle on the world Chemring lives in. And right now, that world is rearming at a speed we really haven't seen since the Cold War.
And what you're seeing here, this isn't just some short-term blip. No way. This is a big, structural change that's going to last for years. You've got countries everywhere cranking up their defense spending. And the conflict in Ukraine, it's completely emptied out stockpiles of really essential gear. And all that stuff has to be replaced. And that's exactly where Chemring comes in. They make the critical, consumable things. You know, flares, decoys, stuff that gets used up on every single mission, every training exercise. So militaries need a constant supply. They just can't function without it.
Okay, so with that as the backdrop, this whole global situation has led to something, well, pretty remarkable for the company's bottom line.
Just look at that number. Seriously, over 1.3 billion pounds. That's their order book. And the key thing to get here is that this isn't just money they hope to make. Nope. This is confirmed, locked-in work. For a company that actually makes stuff, this is huge. It gives them this incredible visibility into what their earnings are going to look like for the next few years. It's kind of like knowing your salary 3 years in advance.
Okay, so to really get Chemring, you have to think of it as two totally different companies living under one roof. On one side, you've got what they call the engine room. That's Countermeasures Energetics. This is the old school part, the core business. They manufacture the physical hardware, it's super stable, it's predictable, and it just churns out cash. Then, on the other side, you have the control tower. That's Roke. This is the shiny, high-tech, high-growth part of the business, their crown jewel, really. It's all about electronic warfare, cybersecurity, you know, the futuristic stuff.
And this chart, it just shows you how strong that core business is. The engine room, the C&E division, is absolutely firing on all cylinders. It jumped almost 17% last year. That growth comes directly from that global demand we were just talking about. This part of the company is the bedrock. It's solid as a rock.
So you're probably thinking, okay, if the core business is so strong, why has the stock been all over the place? It's a great question. And the answer? Well, it's not in the engine room.
The problem? The source of all that uncertainty is Roke. Remember the control tower, the high-tech, high-margin division that everyone was banking on for future growth? Yeah, it just had a really tough year.
An 18% drop in revenue. Ouch. And that drop, that's the central conflict in the whole Chemring story right now. Is this just a temporary stumble? You know, management says it's just contract delays, no big deal. But the critics? They're wondering if this is a sign of something much deeper, a real structural flaw in their crown jewel.
And this table really lays out the whole debate. This is the heart of it. On one side, you have the bulls. That includes the company's management, of course. They're saying, hey, these are just temporary headwinds. They'll point to that massive £251 million storm contract and say, see, the big orders are still there, they're just delayed. But then you've got the bears, and they're seeing some very real risks. They're worried about governments changing their spending plans, about how slow the expansion into the US has been. And that big storm contract, they'll tell you it's great, but it won't actually turn into real money for years.
So the company's leadership is out there, they're confident, they're promising a big comeback, but, and this is a big but, see that little phrase there, weighted towards the second half. What that really means is, trust us, it'll get better later. And the market? Well, the market is basically holding its breath and watching. The big question is, can they actually deliver on that promise? Okay, so just when you think this is a simple story, right? Strong engine room versus a struggling control tower. An outsider shows up and adds a massive plot twist.
We're talking about a rumored buyout approach, and not from just anyone, but from a private equity giant, Bain Capital. Now, it's unconfirmed, but it's a super fascinating twist. It throws a whole new light on the situation, and it really matters for a couple of big reasons.
First off, it's a huge stamp of approval. It means that some very smart people with a lot of money looked at Chemring, even with all of Roke's issues, and basically said, hey, this thing is undervalued. Second, it might create a sort of safety net for the stock price. If one big player is sniffing around, others might be too, which could stop the price from falling too far. And third, and this is maybe the most interesting part, it hints at a possible game plan. What if you just split the two businesses apart? Break off Roke, the high-tech part, from the manufacturing side to unlock its true value as a separate company.
So let's pull all this together. You've got record orders, a struggling star player, and buyout rumors swirling around. It's a lot. So what should you be watching for next? What are the key things that are really going to decide where Chemring goes from here?
All right, here are the 4 big things to keep on your radar. First, the results they announce in June. That's going to be the first real test of Roke's promised turnaround. Second, there's a big U.S. Army contract, the JBTDS. If they win that, it could be a complete game changer for their U.S. business. Third, we need to see some real progress on that massive storm contract. Is the money finally starting to flow? And finally, you got to listen for any more of those M&A rumors. Any new whispers could change the entire story overnight. These are the things that will tell us who was right all along, the bulls or the bears.
So in the end, the whole story of Chemring really boils down to this one central question, doesn't it? Is this a safe bet in a pretty dangerous world propped up by its reliable core business, or is it a company whose high-tech future, the part everyone was so excited about, is still just a little too uncertain? It's a classic case of stability versus potential, and it's absolutely fascinating to watch.